Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. It is January 5th, Thursday, and the market did sell off today. And they're blaming, I don't know if it's blaming, the strong jobs report. And let me kind of explain that a little bit because that's kind of a strange thing. Why would the market sell off if we had a strong jobs report? Well, part of the problem that we're having here, of course, is that it's a difference of between the indicators. The jobs report is a trailing indicator, whereas the stock market is a forward indicator. The stock market is a forward indicator of about 6 months, whereas the jobs report typically is a trailing indicator for about 3 months. So there's about a 9 month gap, and that is part of the reason I think that we're seeing this market reaction. Also, the thing about the market is that it is definitely looking to probably move lower. I suspect that we're going to move down at least another 20%. I think we're going to move down at least another 20. Sorry about that. Having a little bit of issues with my camera here. There we go. We're back. Okay. And so that's kind of what's going on here. We're seeing the market move in such a way that you would think, well, you would think good jobs data equals a good market. Well, that just hasn't been the case here, because we've had essentially another day of fall off on the market. I am currently net short. I actually don't have any long positions currently. I want to go over that with you just in a second. But let's take a look at the market pulse. This is something that is provided by Investor Business Daily, and I think it's very worthwhile if you're an active trader to look at on a daily basis. And basically, what this says is that the market is in correction, and when the market is in correction like this, it's best to either be fully in cash or potentially short, and I'm basically short the market right now. There were two things that were up on volume. No, not on the price, up on volume. Ryanair and Lamb Weston. I think you can kind of discount that, and there was quite a bit down on volume as well. So something you might want to look at here. Right now, I'm currently holding no stocks long. Right now, I don't have any stocks right now long. Everything I have is in cash or is short the market. And I want to show you the stocks that I am short the market currently. Currently, I am short three stocks in the market. Um, Auto Nation. Let's get that back here. There we go. Get my camera back here. There we go. I'm short Auto Nation. I'm also short Discover Financial DFS, and I'm short Amazon. Amazon was down significantly today, about 2.37%. And they are going to be closing warehouses and laying off people. So that is the indicator that we really want to look at rather than the jobs report. Remember, the jobs report is a lagging report, and major layoffs at large firms, those are a leading indicator. So Amazon is sensing a lower market for their goods in the coming future, in the next 6 months. That's why they're laying off and consolidating, and that has not yet appeared in the jobs data. That will, I'm sure, very shortly. That's one of the reasons why we did get such a sell-off in Amazon, and Amazon has been moving lower for quite a while now. So, just without further ado, let's jump on over to the Spider, and this is the ETF, exchange traded funds, that covers that basically covers the S&P 500, and the S&P 500 is really the index that I think is really worthwhile looking at this time. You know, at this time, just because it has been somewhat volatile, and it is showing a downward trend. Today we were off quite a bit, about 1% on the Spider. Now remember, this is an index, so and we've been in this sort of consolidation. We're up a little bit after hours. I suspect, we have a little bit of consolidation here. I do expect, though, that the month of January is going to be probably more of the same. I think we're going to continue to move lower I think we're going to move lower on the on the data here, in the market. So that's something that we have to get ready for. Right now, a good position to be in, of course, is cash. And let's see if I get this. Well, for some reason, it's not letting me do it. Okay, so let's shrink that a little bit there, that we can see it better. There we go. All right. So this is basically the situation here. Of course, we are we moved down a little bit on the spider, and we're in this kind of consolidation area. I do expect it to move lower. It's just, right now, many of the large funds are having to sell their positions and get out of positions. Also, I want to take a look at Microsoft, MSFF. The reason this one is key is because this is a key component of the Nasdaq, and also the QQQ, which is the Nasdaq 100 ETF. So, and you can see there was quite a bit of selling of Microsoft today. It was down basically, more than usual, over 2%, and then down after hours. So I think that we're going to probably see some more pain here. Currently, it's at 223.30. This is a good candidate for shorting. I did short this one. I did close the short early though, on this one. So that's kind of the long of the short of it. Let's get to the questions. Thank you so much for holding on here on this Thursday and see if we can get some questions. Thank you. And thank you so much. There we go. Okay. What is your opinion? Thank you. Good afternoon to Charles. What's your opinion of KOLD? Let's look at KOLD real quick here. Uh, KOLD. Just want to look at this one quickly. This is ProShares Natural Gas. And this is a bear fund, I believe. No, I'm sorry. I'm sorry. Seeking results consolidated twice the inverse. Yeah, this is the bear fund of the December. Okay, so this is the bear fund. So you would buy this fund if if you're thinking that the price of natural gas is going to go up. I'm sorry, excuse me, it's going to go down because it's the inverse. So this is a little bit of unusual fund here. That's kind of how it works. Um, if we go if the price of natural gas goes down, this will go up. Now the question is, where is it going? What's it doing right now? It was severely up today, 15%. That's probably why you saw it up $4. I want to kind of look at the 1 minute chart here to see. Wow, that's interesting. Okay, so I'm not seeing it there. Let's look. I want to look at the daily chart here to see kind of what's going on. Okay, well, this is up 14 cents. And it closed up. I don't know what's going on with this. That's a good question, Charles. I really don't know what's going on with the ProShares. What I want to look at, let's take a look at the natural gas index. I want to see what the price of natural gas, the underlying commodity, is doing. And that is, let's pull this up right now. This is the natural gas chart. Here we go. Yeah, it's been moving lower. So you would think this is the price of natural gas, not KOLD. This is the price of natural gas here that we're looking at. Moving down, it looks like it got some support at 4. I don't know. So the question is it going to bounce here? I think there's a chance that we may get a bounce on natural gas. Natural gas is one of the hardest commodities to trade. It's extremely volatile, but as you can see, since August, when we made a high here at about 10, it's been running lower. Now, one of the things that's contributing to this, of course, is that it's been a very warm winter in Europe, uncharacteristically warm, and that has helped with the situation that they have with natural gas. So I can't really give you a good opinion on this. I wish I could, but with the price of natural gas going down, you would think this would be a good long, but I'm worried that we're going to see a reversal here at 4, and we're going to see the fixed price for natural gas go up. That's kind of what I'm looking at here So I don't know. I'm a little bit gun shy in this market, as you can tell. I mean, there's been so many false starts in it, but it's an interesting play. I just don't I think I would be on the sidelines right now just because of just because of this market. It's just tough market to trade. All right. Will BA pull down to 195? I probably should have bought it when it was pulled back here. I just didn't get on this boat. And Boeing, for many years was the premier exporter. This was the largest exporting company in the United States. I still think it holds that title. I'm not exactly sure. I'm not exactly sure if it holds that title, but um, we definitely had a situation where it was close in. There was a buy point at 179, obviously, and then now it's extended. It's above 200. Here's the thing: I do think it's going to pull back a little bit. I want to buy it closer to that 10-day line. Right now, I think it's just dangerous buying it anywhere above that 10-day moving average. Right now, the 10-day is at 193. So if you could buy it, we're about 5% above that 10-day line. Theoretically, you could probably buy it here, but I still think it's a little extended. Wait for a pullback. Wait for it to come down to maybe one, right at 200 or right below 200. But right now, I think it's too far extended here. So I wouldn't. I would wait on this. What I would do is if you're going to buy this long, I think you got to be careful, and I think you got to buy it closer to that 21 day, closer to the 10-day line. The 10-day line being at 193.45. So I would probably hold off. I would set a buy order at maybe 197 or so. I know that sounds hard to believe, but I think it's going to pull down to there. And I'm showing you with the marker about 196. So if you could set a limit order at 197 to buy it, that might be a good way to get into it. But I'd be careful buying an extended. Just it's a little bit high above this buy point. So I'm a little bit concerned on that. I want to see it pull back. It looks like it may pull back. The question is, will it pull back tomorrow or the next week? Who knows? But I definitely think you want to buy it pulling. I think definitely think it want it to pull back here to the there we go. Again, I'm having problems. I think you want to buy it closer to 200, possibly as low as 197. I think you're extended right now, and I think it would be a tough place to buy. I think it would be a tough buy right now. So that's my kind of my 2 cents on Boeing. Good stock though. All right, let's look at Dollar Tree and Dollar General. This is in the discount retailer space. And one of the good things about this is that, as the economy gets worse, people shop at Dollar Tree. Dollar Tree is trading below its 200-day moving average right now. So that's a little bit of concern that it is below that 200-day moving average. We probably want to see it reverse and move higher, but currently it's in this consolidation and the bottom is right here. So I just want to kind of put that on there. So this is the bottom, and this 175 is sort of the top of the consolidation. It's come all the way down. It bounced basically at 137, and then it tried to get up, but it's gotten some resistance at the 21-day line. So probably, um, you know, this is probably not a long. This is probably a short, to believe it or not. But I would be careful with this one. I'm going to put Dollar Tree and Dollar General up as kind of looking at both of them, so we can see it more clearly here. I'm going to put Dollar General up as well, and then let's go with a shorter. I like to go with a little bit shorter time frame. I'm going to look at the last quarter here to kind of give us an idea of sort of what is happening here. Let's pull up the comparison chart here. There we go. Okay, so here's the comparison chart for Dollar Tree and Dollar General. You can see they're kind of in lockstep. They're kind of in lockstep. They moved up. Dollar Dollar Tree, of course, is probably the better store out of the two, but they're still pretty similar. So right now, basically, Right now is essentially, right now essentially they're both up on the year, but on the quarter, but barely. Dollar General is up right about a little bit over a dollar, and Dollar Tree up about 5 cents. So if you invested in these stocks back here in September, you'd be 5 cents richer with Dollar Tree. This trend is a little bit worrying to me because this should be going up, but again, I think the whole market is turning lower. And as you can see, we've got a situation with Dollar Tree. Oops, there we go. We've got a situation with these retailers that since November they've actually been trending lower. Now they are trending up a little bit today, but again, I think I would stay out of this. Again, it's not, again, it's just a tough market to be long in. So I would stay out of both of these. You would think that in a declining market, um, they both would do well, and they both have kind of held their own, but they're not doing well relative. Now let's look at I compare this to a stock that I'm short, and that's Amazon. Let's look at it, AMZN. Uh, this is a stock that I'm short. Let's see if we can pull that up here as well. And with Amazon, let's put Amazon in here. With Amazon, you can see Amazon. This is one of the reasons I'm short Amazon, to be honest. You can see how Amazon is way underperforming Dollar Tree and 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 Dollar General. So there's a general downward trend in the market. I also want to put in Walmart WMT in there to just kind of look to see where that one is too. Walmart is holding its own with Dollar Tree and Dollar General. So in the retail space, going long, it's the discounters that are winning over the convenience. Convenience is losing out to discounters. This is one of the reasons I'm short Amazon right now. I've done fairly well in the short. I'm probably going to continue this at least for a while because people are having to get real and not get the deliveries from Amazon too expensive. They're going to Walmart and Dollar Tree, but still, Walmart and Dollar Tree aren't doing all that well. So again, it's not really. Again, I think you're better almost to be at this point in cash when it comes to these retailers. I just think it's very difficult with the retailers. Walmart. Let's take a look at the Walmart chart, WMT, and of course this is the biggest retailer out there, and we've been I showed the comparison to Dollar Tree, Dollar General, and Amazon. It is competing better. It's competing better on those terms than them, but it's still just barely above the 200-day moving average. It's still in an upward trend right there. I mean, it came up, it got some resistance in this cup. I don't know if you can see it, green line. This cup with handle. It's sort of in that handle. So potentially, if this was a stronger market, I would be buying Walmart hand over fist because this is a cup, and it looks like we're making a move higher, 82 relative strength. But in this market, I'm just really really gun shy right now because I just don't think there's any strength in the market, and I do think that pretty much everybody that's in Walmart in terms of the funds is already there. I mean, there's 3,000 funds in Walmart. Let's look at their technical. Let's see what their Walmart is gonna do next year. At least the projections. That's what I'm going to look at the projections here. And this is the check. This is the fundamental analysis. Last quarter, it was up 9%, which isn't a lot. Up 3% in terms of their revenue. I mean their per share. The per share revenue, but it's still and the cash flow is good. I mean, 12. I mean, $10 a share. That's excellent. And the PE ratio is very good at 24. I want to compare that to Dollar Tree and kind of see with Dollar Tree what the situation is. Yeah, 8% up last quarter. They're doing a little bit better on the increases in the earnings per share, and they're also a little bit lower in terms of their PE ratio. Again, very strong cash flow there. So, I mean, it's really a mixed bag. I mean, they're kind of neck and neck as it showed with the comparison chart. Um, if the safety bet would be would be Walmart here, but I just again I'm not too enamored with Walmart either in this market. So I sound so negative, but yeah, Walmart and Dollar Tree are performing about the same as with Dollar General. So it's the discount stores over the Amazons of the world. That seems to be what's happening. That seems to be where the money is. So it's moving towards the discounters for obvious reasons. But I think overall sales are going to be down. The sales are going to be down. Let's look at SE. Uh, Sea Limited. Of course, this is based in Singapore. This is a good alternative if you want to be in the China stocks. The China stocks are a lot of there's a lot of political risk right now with some of the China issues that I think that the the risk I don't think outweighs I think the risk outweighs the benefit here. With C Limited, we're down to 55. The question is, can this be shorted? Let's take a look because it definitely has been pulling back. Let's go to the weekly chart and kind of get an idea of how much money that get an idea of how much, what the losses are for this stock. So let's take a look here. Yeah. And as you can see, solid downward trend on the weekly chart. Basically, it's got a 14 relative strength. That's very low, obviously. We did get a bounce off the 200-day moving average. It could be starting to move higher, but here's the thing. It's lost 73% of its value. So would I short this one? Well, I typically, after about 60% of the loss of value, I typically don't like to short them just because there's not a lot of meat left on the bone. Also, it's under $100 in terms of a share. Would I buy this long? No. Would I short it? No. So basically, no on that one. Sorry to be like that, but no. Let's look at Netflix to see kind of what's going on there. Of course, it did have a little bit of bounce. Netflix did. And this was a great performer, obviously, about a year and a half ago, 2 years ago. I did pretty well in this stock, as a lot of people did as well. This one's in an upward trend, interestingly enough. We've been in an upward trend, and we're basically above the buy zone, which is incredible. The pivot on this one, the consolidation base, was 251.99. It's at 309. Now, here's the thing. I do think that this one is getting ready to move lower, but we're not there yet. We're absolutely not there yet. We're above the 200-day line, which is good. We're in there on that. But the question is, I do believe we've had some buying coming in here. Earnings are in 14 days. I would put this on the watch list to short this one, and the reason I think that is because I do think that potentially over time this one will be a short because I don't think it's going to hold this value. I just don't. It's got 33%. It's got 30% down from its all-time high. Well, it's 52-week high. So I do think that this one's looking like it could break down. It looks like it peaked here, and it looks like it's getting some resistance off of the 10-week moving average. So let's look at that as, yeah, we're 4% above the 10-week moving average. We're 27% above the 40-week line. So the question is, and we're looking at the weekly chart here, could this one start breaking down? I don't think you want to do anything yet. This looks like a head formation to me here with a shoulder. I think we need to see this thing fail, and I think it's going to fail down below the 40-day line. But I just wouldn't touch this one right now. I wouldn't go long on it either because it looks like it's starting to break down. So not incredibly exciting. Okay, for TikTok, let's look at Snow. Let's analyze that stock really quickly. This is a heavily invested stock by funds. A lot of funds are in this one, and it has been, it has had a wretched This one possibly is a good candidate for a short because, as you can see, it sort of has this head here. It isn't quite head and shoulders yet, but it's got this head here, and it's trending below the 50-day moving average. This currently has lost quite a bit of its, quite a bit of its, um, it's quite far off its 52-week high. Let's take a look and see where it's off of its 52-week high. Yeah, it's 63% off of its 52-week high. So it's probably too low to short it here. You probably, and again, hindsight's 2020. This, obviously would have been the head, and then this probably would have been the short right here as it was moving up to the 40-day lines. But right now, this is going lower. If you're more than 7% down this one, I'd sell it. Even though it does starting to have some good numbers, I do think it's going lower. That's just my opinion here. But as you can see, this is the monthly chart, and it's definitely lower. So I think you want to sell this one if you've got it. I think it's going lower. It may bottom out. Who knows? But currently, snow is not a stock that I think you want to be in. I just don't think you want to be in it right now. All right, KWEB. Okay, this is a Korean. This is obviously a Korean uh, ETF. I think it's Korean ETF. KWEB. I haven't been again. I've been kind of shying away from some of the Asian issues because they've been they have been very tricky to trade. This one's coming up to a 34 36 buy point, which is good. It just came up to that. So that's looking pretty good. I mean, in general, this is looking better than most. I'll tell you that. 93 relative strength, which is very strong. Good checklist, fairly good checklist. Remember, this is an ETF, so you're not going to get all the 9 criteria. EPS changed. Okay, so it hasn't quite made the earnings, but that's looking pretty good, actually. That's looking good. I'd watch this one. I probably wouldn't buy it. Let's see if it can hold above the buy point at 34.36. If it can hold above that buy point, put this on. If it can hold above that buy point at 34.36, then I think we have, yeah. If it can hold above there, then I'd consider buying it. It's right at that right now. So I just want to look at the 1-minute chart to see. Yeah, okay, so it definitely has some resistance at about 35. That's kind of where the resistance is. And then it went up, and then it's pulled back, and it's looking like it's gaining strength and possibly going higher. Here's the thing. I'd probably stay away from this one. Again, I know in this market, I think it's treacherous. I think right now, right now we're in a downward trending market. And I think until we see some consolidation or a change in the overall market trend, I think you got to either be in cash or short. That's kind of my take on it, at least for right now. Is it too late for Vera VRNA? Let's look at VRNA. And let's look at Verna for Charles. Is it too late? I don't know. This is looking kind of like a flag to me. This is kind of looking a little bit flag-like to me here. This, oops, that, not totally, but that's looking like a little bit like a flag. See how that kind of comes up and then like that, all the way up from 14. What do these guys do? They develop. UK develops therapeutics. Okay. Well, that's kind of looking like a flag. Somebody knows something because there's the Easter egg there, which means that the unusual activity in it. So that's strong. It's come up like that, and then it looks like this one. I don't know if this is too late. I think this is a flag. Charles, if you're willing to take a gamble, this one might not be bad because this is sort of a flag pattern. Not exactly, but sort of a flag pattern. This could break to the upside, and it looks like, yeah, looks like it might be 25.41. Something is going on. I don't know enough about this company, but there's something going on in this because typically in this kind of market, it shouldn't, this is a sign that something is going on. This may be they may be acquiring it. Something is happening really, and it really started to happen. See if I can. It's, it started to happen back here in August, and then it's just all total pickup in volume since then. So, I wish I knew more about this company and I could give you a better thing, but the setup looks pretty good. The setup looks good, pretty good, Charles. So I think you might want to put a feeler out there, maybe a quarter half position, because it does look like it's going to make a move higher. As hard as that is to believe, let's look like it's going to make a move higher. All right, let's take one last question. Oh, wait a minute. Please do Baba. Okay, let's do Baba first because that's Baba is of course the um, Alibaba, which is one of the biggest stocks, obviously Chinese stocks, and the biggest problem with China right now is the political situation, but it definitely has moved above that 200-day moving average. So that's very positive. And, you know, I don't know. I don't know. I think I would be careful with this one, but it looks like it's starting to change. It's starting to change trend. This is the reversal line here. So it's definitely above that reversal line. I would wait on this one until Monday and see what happens, see if it pulls back. But it definitely looks like you would definitely want to watch this one. For some reason, even though their sales are going down, their their profits are going up. So I don't know what's going on with Baba right now, but it definitely looks like it may be trending. It may have reversed and is trending higher. And 79 relative strength, that's pretty good. So I would watch this one. I would not buy this one right here. I would watch this one. I would watch this one going forward. It's just that's definitely what I would do with Baba here. So I would watch list, and that would be how I would handle it. I would not buy this right away. All right, MGA. Can you tell I'm looking hard to get some short term? Yeah, it's been really hard to find good candidates. I mean, I've been sort of like, normally I like to be invested. I am mostly in cash right now. I'm basically in cash and short, and it's just been really hard to find something that's really good. Magna International probably know this one. Auto parts manufacturer, primarily in Canada. They have a huge presence in Canada. This is an interesting company, as I think that eventually in the future, but we're not there yet. Um, automobiles will be There'll be a lot of different automobiles that are designed, and then there'll be companies like that make them. And Magna would be definitely like an outsourcing company to make automobiles. They really are quite a large firm. Would I buy this one here? Well, it's just really tough. I just you see they make complete vehicles for the automotive OEMs, but again, this one's tough. I'm not as bullish on automobiles right now. I just think that this next year is going to be tough with the rising interest rates. I just don't think they're going to sell as many automobiles. I think I just don't think autos is the place to be. I've been short Tesla, and I did close the Tesla short, but I just don't think autos are the place to be right now in the market. All right. Well, thank you very much for tuning in. So appreciate it always. Not a whole lot to report today. The market was down. I think really what we've got to look at, in the leading and an indicator comes out, with jobs report remains strong. The problem with the jobs report indicator is that it's a trailing indicator. It's not a leading indicator. So that's one of the reasons why I think the market had a negative reaction against it. I do think what's going on right now is a lot of the big funds are selling their losers, even though it's the new year. I just think that a lot of people are going to have to get out of the techs. This is why I'm looking for shorting opportunities. I'm short Auto Nation right now. Let me show you that chart. Part of the reason I'm short Auto Nation is because I just don't think that automobile sales are going to do all that well in the short term future. And I want to show you kind of my position that I have in Auto Nation, and it's right here. You see, I did short it. I shorted it a little bit too early. It came up to the 21-day line, and then it looks like it's pulling back. It's currently at 109 now. My short was at 107.60, and I probably was a day early here. I was a little bit early. That's where I shorted it. I kind of probably should have waited until it came up to that 21-day line, but I definitely think that we're gonna see weakness in the automobile sector, and AutoNation is one of the biggest dealership groups out there. So I just don't think it's going to be very good for retail sales, at least not for a while. Not for a while. So with that, everybody, thank you so much for thanks so much for taking a look at the show today. I so appreciate it, of course. Uh, if you could, a big help to me, of course, would be if you would like the show, like and subscribe. That's what you got to. That's what they want. So please, if you could help me with that, that would be great. So smash that like button. Smash that like button, and also subscribe. We're on TikTok as well. We're on TikTok. We're on YouTube. We're on Twitter, and so please like and subscribe. I will see you back here tomorrow. Thanks again, everybody. Good time. The market is in retreat right now. Good time to be in cash or short. Be very careful if you go long on anything. So right now it's a good time to be in cash in your accounts and possibly short. I'll be back here tomorrow at 5. Thanks, everybody. Happy trading.